What's up, everyone? Welcome to the Outlier podcast. I have my friend and doppelganger, Eric. What's up, Eric?
Hey, Derek.
You and I have connected for a while now, but I don't think we've had a chance to actually get together for a podcast on my channel at least. So welcome. Thanks for coming to hang out for a bit.
Yeah, absolutely. I know. Yeah, you've been on my podcast a couple times. We've had a couple conversations that we wish we had turned into a podcast. And so it's always good talking to you and talk about our approaches. And this might be my first video podcast, so this will be
Good.
interesting for me. But yeah, it's cool,
Well,
man. Glad to be
well,
here.
you look great, and I always feel like I provide a good benchmark, right? Like I'm the ugly friend, so I always make other people look better.
Yeah.
So you're welcome. I'm
Oh,
doing my
okay.
job.
Thanks. I always
Yeah.
thought I had a face for radio, which is why my show is always audio.
Yeah, I mean, I don't disagree with you, but I definitely also have a worse face. So, no, man, jokes aside, it's great to catch up. So, I thought with you to kind of dive a little bit into your background, and we'll get into more recent stuff. But I think it would be useful context for people that may not be familiar with who you are, what your background is, or even your own audience that might not have all the blanks filled on what your background is. I thought that would be a cool place to start. So, walk me through specifically when you got into derivatives and why.
Okay. So from a background standpoint, I don't have any sort of financial background. How far do you want to go back? You want me to just start?
Wherever you
So
started with derivatives, if that's pre-womb,
I'll go
post-womb.
back a little bit further because so when I went to college here in Florida, I started out as a math major and I ended up changing to education and taught like middle school math, like algebra, that type of thing. And I did that for a few years. I was a musician. I was a percussionist and marching band type guy. I played drums at Disney around that time, and so this was um, this was the early '90s in Florida. And in case you didn't know, I think Orlando was like the rave capital of the world. So for a few years, I got into DJing and music, and I had this drumming background. Ended up going back to school for networking, like Cisco networking, IT stuff. And then I got into an IT career that I was an IT administrator for about 15 or maybe 16, 17 years. I did networking. We did all the physical to virtual transition and then virtual to cloud, and it ultimately ended up being like an infrastructure manager. But when I started my IT job, where I got into or first learned about derivatives is I went to a seminar, and I think it was called Get Motivated, and it had like a bunch of different people, like real estate people. I don't even know who all the people were, but one of the guys was from Thinkorswim, and they started talking about options.
You remember who it was?
And I'm sorry,
Do you remember who it was?
I want to say it was Phil Town.
Got it.
That name rings a bell.
Okay.
Um, and I remember he had this joke. It was like, so he brought up his Thinkorswim account, and I can't remember. So sorry, let me back up a little bit. So they did this free thing, and then they offered a class for Thinkorswim and an options course. So my buddy and I, they let you pair up. We bought like this sort of advanced class where we learned about options and we learned about credit spreads.
Okay.
And in that class, the guy, and I think his name was Phil Town, and I could be wrong on that, but I just remember this funny thing where he brought up his Thinkorswim account, and he's like, okay, here's how you buy an option, and he wasn't trying to trade, he was just mechanically how to do it, and he had his balance showing he had $1 million, like $1 million account, and he was buying these options, and he said, he goes, oh, you know how you get to $1 million account? And he's like, oh, you start with 2 million. And I was like, everyone laughed. And it was like this huge, kind of funny thing because we were talking about, losing money and that type of thing. But I think this was around 2004 or early 2000s when I took that class. And so I just started messing around with mostly SPY at the time, and kind of doing more directional things like technical. I got into technical analysis. So that was one of the things that they were sort of touting, was there was an indicator, and they called it the three green. If you got three green arrows, it was a buy signal. And I can't remember exactly what it was, but that was kind of my introduction to all that whole world, was going to a seminar and basically paying money to take a class.
Now, when you first saw options, I find people have different experiences with it. For me, it was immediate intrigue. I was just fascinated by these things. What was your initial reaction? Because I assume at that point you were familiar at least with like basic equities and just general stock market knowledge. But when you saw options, what was your initial response?
I thought it was, and what I was told, I guess, was more about, if you don't have a lot of money, this is a way you can start trading to where it would be significant enough for you to do so. So if you had $1,000 and you want to buy a stock and you want to be diversified or whatever, you're not going to buy one share of this and one, no one has the interest in it. It's harder to stay interested when you don't really have enough skin in the game, or you don't want to put a lot of skin in the game. So to me, the initial interest and intrigue was, oh, this is something I can do on the side where I can kind of define my risk. I don't have to risk that much. I can, practice, if you will, and that was another thing at the time. Thinkorswim had a paper, and they still do. They had paper trading. Mm-hmm. So you were able to sort of practice before you put real money to work, and then you could put real money. But so for me, the thing that kind of interested me the most was doing like directional trades where you're using single options to basically as a stock replacement strategy. So then it was more about, well, if you're out of the money, you really have to have it to move, and you have more premium or excuse me, Greeks against you. Whereas if you buy in the money, it's a little bit closer to stock replacement. So that's kind of where I started with all that.
Got it. And did you have anything in the beginning that kind of stuck with you that made sense at the time? Or was it all just, this seems like something I'll try, this seems like something I'll try? Was there anything that you kind of navigated towards naturally?
Well, part of the class I took was credit spreads, and I ultimately kind of reverted back into that because it's to this day. And I think I didn't take the advanced class that they had, which was like a $10,000 or $20,000 thing, but they were kind of touting it as a college, and they were going to teach you all the other fancy strategies. But I think credit spreads is kind of what I sort of remember a lot about, because they did a pretty good job of explaining in non-option terms what it is, and bearish, neutral, and you don't have to be all the way right. You just can't be really wrong, and those type of things. And that kind of appealed to me at the time. And I think it appeals to a lot of beginners still, because it's, a way to, it's defined risk. You know exactly how much you can lose in case something goes wrong. But you don't always have to be 100% right. So that kind of stuck with me for a while. And then as I got more into technical analysis, I kind of threw the options out. It was more, not threw the options out, but I focused less on the option, and selection was more like, okay, I'm trading a 30-minute chart. I'm going to buy an option that's 30 days out and look for like swing trades and stuff. So, yeah, I think from that period of time, what I've sort of reverted back to and thought mostly about is credit spreads, and how you can use those as leverage, even though you're not as leveraged as single options. I don't know if that makes sense, but
it does. Yeah. Well, I mean, to your point, if you're using something like a credit spread, you'll always see a better return on invested capital. And Yeah,
Yeah,
it
your capital
provides
efficiency
exactly.
is good. Yeah.
Yeah, it provides a little bit of a different little bit of a different risk profile, but they're very, very capital efficient, obviously. So walk me through then the way that you progressed. You saw credit spreads, you shockingly turned down the $20,000 course, which by the way, apparently you and I need to get off of YouTube and we need to just start doing $50,000 courses and teach people basic option structures is what I'm
Yeah.
hearing here. Is that we're
Yeah.
the idiots. Um,
That's funny.
but so you went through, credit spreads, you tried some of these other stock replacement strategies, swing trading applications, started navigating back to credit spreads. What's the time frame that this is happening? Over what period of time are you kind of flowing between these?
Um, it was, it was like a couple years. I'm trying to remember exactly.
Yeah.
It's been a long time. Um, I was doing credit spreads and that was boring. And so I wanted something more exciting, which was kind of more I just call it like short-term swing trading. I wasn't day trading because at the time, I was still working and couldn't, I wasn't going to try to do that. And also at the time, back in uh, let's call it 2010 or so, um, they only had expirations on Fridays. So it wasn't there wasn't kind of the same mania that there is today where you're like, man, you can wake up and like there's something to do every day if you want to. Whereas back then when they only had Friday expirations, it was like, okay, if I'm going to do a swing trade on a Tuesday, should I wait? Otherwise I gotta choose 3 days out versus 10 days out. And there was kind of a little bit of choice that you had to make. It wasn't as granular. And so that kind of put in hindsight, pushed me out to trade farther out
I see.
because when you what I learned sort of inherently was that if you bought an option with 3 days to expiration, obviously you have to get the move that you're expecting in those 3 days or you don't make money. But if you're, depending on your analysis, if you're looking at something like a daily chart, you might get a swing trade signal, moving average cross or whatever it is. And so you may want to let that play out longer. So you may want to buy 30 days out because if you get a really good swing, you want to hang on to that. So there got to be like a bunch of decisions that I had to make that, and I didn't, I kind of just ended up at like 20 to 30 days because I figured, well, that's long enough, it wasn't very scientific. But then ultimately I got sort of reverted back to credit spreads. I was doing some vertical spreads too, because on more expensive stocks, you can spread it off to reduce your capital. But there was still the same sort of swing trade mindset. But then I ultimately got back to credit spreads because it was just easier, if you will. You just can't be that wrong. So I got away from those signals, if you will, like pure technical MACD, whatever signals, and just try to look at, hey, is the general trend up? Yes, let's sell some puts or put spreads or whatever. And so then you fast forward to, I think it was 2016 when they added Monday, Wednesday, Friday expirations for SPX. I really started focusing in on that because I could trade my shorter term stuff more consistently, because I learned over time that part of consistency is choosing the same duration. And with the advent of now we have daily expirations, you can have a 1 day to expiration strategy and you can trade it every day as long as your setup is there. Whereas in the past, if you wanted to do 0 DTE, you could only do that on Monday, Wednesday, Friday, and you could only do 1 DTE on Tuesday, Thursday, because technically Friday was a 3 DTE. So as technology and the options landscape sort of has blown up over time, it's allowed for more strategies and more frequency. So what I've done, what I've ended up doing is really kind of just bringing everything back into for my trading, and I'll separate investing from that. But for my like sort of short-term trading, options trading, I pretty much just trade SPX because I have multiple strategies like 1 day, 7 day, 14 day that I can put on. And I can get that consistent DTE now. So it can be a Tuesday and I can trade 7 days to expiration, as before that wasn't possible. So, and I think over time, the technology available to retail traders has changed drastically. And I got into back testing years ago with a couple. I think I started with CML Trade Machine Pro, which they still have a great platform. And then that's when I started like sort of um, honing my strategies a little bit more. Fast forward to today, where I kind of created my own analytics to really increase my frequency. And kind of something you mentioned before, the one thing I like about the credit spreads is that they are capital efficient, and when you can increase your frequency with and continue a similar win rate, risk reward, you can trade smaller and therefore more consistently. So that's kind of where I've ended up over the years, and why I typically just trade SPX at this point.
And two questions. The first follow up is, in the early days, what was your original goal with trading? What were you trying to accomplish other than the fact make money, right? That's pretty clear. But beyond that, did you have any specific goals? Like, were you trying to return a certain percent? Were you trying to limit drawdown? How did that look?
So I lived through the 2008 financial crisis, and I was in my corporate job, and had my 401k, saw my 401k get cut in half.
Hell yeah.
And then wrote it back up like a champ. Luckily, my wife and I both luckily didn't lose our job. We didn't lose our house. Like I feel very fortunate that I kind of just made it through there. My boss and this other guy that was above me, they didn't make it. So I became the boss after that. That was, I think
promotion. Hell yeah.
Yeah. So the GFC really kind of woke me up, and I'm trying to think of how old I was during that time. I was probably late 30s or mid 30s or so. And it was just like, you can save your whole life and it could just get wiped out, and cash under the mattress isn't good. So my whole thing, and still to this day, is like, okay, I want to learn, I want to be able to generate extra income from the money that I have in perpetuity, because everyone's living longer. You're probably going to outlive your money, most of us, right? So it was really for me to learn a skill of making money without having to work a job or work, and I had always kind of thought, okay, this is something I'll do in retirement. Because when I was in the IT field, and, even in like elementary school, I did some coding with DOS, and like, I was always kind of a mathy, coding hack.
We just call a spade, right? Nerd, right?
Yeah, I was like kind of a little bit of a nerd there. And being in IT for however many, 15 years or so, you see life cycles of things, like Windows XP, Windows 7, I have an A+ certification in Windows 98. I don't even know if you know what that is. But so like you go through these cycles, and then at some point you're like, am I going to be able to do this when I'm 50, 60, like learn the next thing? Most of the things that happened kind of went into the cloud, and I sort of saw the writing on the wall, where I would joke with my coworkers and be like, oh yeah, we're moving this to the cloud. I'm like, I'm basically outsourcing myself And so it was just kind of this thing. And I saw that from the from the very beginning, and I just wrote it out as long as I felt like it. But so the goal was really just to, at the time, is just learn the skill of making money. I already had a job, and I was making six figures. So it was like, I wasn't trying to get rich. I wanted to learn the skill. And obviously options are complex. And I kind of took that as a challenge to learn something complex, because I thought that would be a good way to, well, if I could learn this, I should be able to make a lot of money. And then in hindsight, now I realize I've gone the other way, and I do it the most simple way there is, because it's just like, we've talked about that before, the complexities. But so to your question, my goal really was to just learn a skill, outside of what I had been doing, and with the idea that maybe when I retire, I can have extra income, or maybe retire early, obviously. So.
And you did that, right? You made the jump early. I remember, I think when I had met you, did you just make the jump, or were you just making the jump? I can't remember temporally when that was. It was like really close
It's
to
been, I quit my corporate job 4 years ago.
Well, I would have met you literally like right as you were doing that.
That's about right. Yeah, 4 or 5 years. I quit my corporate job. Now I still, I'm running my app now, Alpha Crunching, that I started. So there is a business there. I don't, I'm not, I wouldn't say I'm retired, but,
But one thing to note on top of that, and I just want to deliver 2 points home for people, but one of them is you did make that leap of faith, because I remember you started Alpha Crunching not immediately when you made the transition.
yeah.
So like you did take that leap of faith. And I just think
didn't know I was going to do Alpha Crunching when I left the job.
Right.
That sort of came up after, and it was sort of recommended to me by one of my followers who was interested in business. And I'm, I got an entrepreneurial thing, in myself. So, but yeah, it was, kind of a leap of faith. It was one of those things. The management at my company was changing. I didn't like certain things, and the people I worked with were great, my boss and everybody. But it was just kind of this, I just had been there for it. It was time for me to go, and they made it easy. So I just was like, well, I'm just going to trade full time. And if I need to go back and get another job, I can. I'm married. My wife works. It's not like we had no income, that type of thing. We switched insurances from my company to her company. So there was a lot of, there's a lot of thought into that. I had a lot of other support for that. But I felt like I could do okay. I feel like I could get by. And then it was like, well, let's just see how long this lasts. And, my biggest concern was, I have kids at that time were in, elementary, middle school. So these are expensive years.
Got it.
So it's like, so I can't just retire and just live off, like fixed income or whatever. So, I still have to, if you want to provide and do all the things that teenagers do, you have to have some money coming in. So, but yeah, it was definitely a leap of faith. It was, I think, a little bit after COVID, it was kind of like, what are we doing? Like where do I want to spend my time? I'd rather make less money, or less security of money, and be able to take my kids to school and do all the things. So I've been doing that for a few years, and it's been awesome. Whereas before, having a, corporate job and trading, you can imagine the money was a lot more, but it was, you weren't able to enjoy it. It was more stressful. And, so it's kind of like a different phase, I guess. And I think COVID had a little bit to do with that. It was just kind of, you wanted a break and enjoy what you have, kind of thing.
Well, I think there's a lot that I want to dig into here. The first thing that I want to make sure the audience is hearing you talk about is what I consider to be one of the coolest parts about trading is that you can have different objectives for what you're doing. So to your exact point, you decided that you wanted to make this leap and use options or trading in general, not, limit to that, although that is what you're doing,
Right.
but trading in general as an income source, right? And as you said, you had very realistic expectations about what the performance might look like. But for you, what was more important than having, buckets of money and making a pool full of gold coins that you can swim in was the freedom that you were using that to enable for you. So that's an objective to have. I think a lot of people need to hear those specific kinds of things because most of us start trading trying to get fat stacks. We're just trying to be rich, right? Like that's the general thing that starts you. And then you kind of get slapped in the face with reality and you're kind of like figuring out how this fits into your life. And I just wanted to draw that point out for people because I think it's a fantastic point. You found something that you could use to literally unlock your time / your freedom, which is massively awesome. Now, let's talk about that transition a little bit because the other thing, and that's why I wanted to give you your flowers or call it out also specifically, is that it takes some balls or whatever else, you ovaries. It takes something to have a job and to say like, I'm going to try to do this my own way with my own stuff. And the cool part with trading is it's give and take, is that it is all you. There's no boss. There's no risk management. There's no therapist. There's no HR. There's nothing. It is just you all around. There's nobody to point at. That's not easy of a transition for people to make. So leading into that transition, when did you start thinking, hey, I could probably lean on this pretty heavy as like an income replacement, quasi-income replacement, however you were framing that? What was that time frame that you were like, how far out from when you made the initial transition were you starting to say like, there's some opportunity here for me?
Yeah. So, I kind of look at it like, so let's go back to the objective real quick.
Yeah.
And this isn't advice or whatever. My top objective is just positive cash flow.
Yeah.
Just, the amount of money you have obviously can help with that, if you're doing dividends or whatever. I didn't have that much money to just live off of like a dividend type situation. But so my thing was cash flow. And then in the good years leading up to when I left, I was pretty good about saving my money. So I left, and if you think about it from a business, and what they would call this is like, well, how much runway do you have? Right. So I left my job with, at least 1 year of runway, meaning if I didn't make any money, I could be fine for a year. And so I was like, okay, well, I mean, why wouldn't you do that? Like at what point is, I wouldn't call it FU money, like I wasn't, but it was pretty close, which is why I left. Right. So if you're working and, you have to have a certain amount of money to do this. So the more you save, the closer you are, and it's the same thing for retirement, the closer you are to unlocking your time. And then when it comes to like cash flow, you also have to.
Can we linger on that point just for 1
Sure.
second? Because I think that's another really common thing I talk to traders about, where they're like, oh, I'm trying to make my gas money with my trade money this week. And one of the things that I try to talk to them about is that exact thing. The idea of for me, it was 3 years because I'm overly conservative. I wanted 3 years of runway. But talk to me about how you thought about building that, because I think a lot of people, when they're going through the transition, they're thinking of, I just want this freedom so bad, that they focus on it a little too much, and then it can sacrifice the ability to sustain the freedom that they're trying to make. So you decided 1 year runway, and that was your target. And how did you arrive at that? How early, again, in this timeline? So if we think T0 is when you made the transition to full-time trader, how far back from T0 was it like, okay, I need to save 1 year's worth of expenses for me to feel comfortable making this transition?
Yeah, I wish I could say I was that thoughtful about it.
Okay.
What what really happened was I just saved
I see.
money. So if you so let's go back to it goes back to how when I came out of college and we got married. It wasn't that soon, but we ended up, we were in debt, right? In the first few years of having
Oh yeah.
kids, we were in debt. And I remember we actually, I don't remember exactly how much, but we ended up getting out of debt. And so that's put me in a mindset of like never want to use a credit card again. I want to pay cash for everything. I never want to have debt again, other than maybe a car and a house kind of thing. So I was building my savings, not thinking I would leave my job. I was building it
I
so
see.
that whenever the shit hits the fan and I need to buy an AC, we're in Florida, need to, get into a car accident, or I want to go on a trip. I want positive cash flow. I don't want an extra bill to pay something off so that was part of my thing for getting, I guess prepared for that, which again wasn't really the plan. The actual
No,
sort of catalyst for me leaving the company was more of a kind of a not issue, but just kind of a falling out, I guess, with some of and I was just like, I'm just gonna go, but
I
I was able to not succumb to I didn't have to be a yes man to stay. So
right.
there was a little bit of satisfaction of like, well, I don't really need this as bad as you think I need this. So, and I just happened to have put in some good habits that put me there. So I had a way to make money trading. Probably wasn't going to make as much as I was making trading and working, but I had runway, and I thought, well, if I can trade more and trade different things that I'm not able to with my job, maybe I can actually make more trading. And that actually worked out. I was making more trading than previously because I was able to focus on it. So you took the chance of, I took the chance of that, but I wouldn't say that I was so strategic in like, okay, I'm going to save this much and I'm going to get, $100,000 and then I'm going to quit or whatever the, thing is. So, but I think I just started doing things that would be in my favor. And then those can culminate at some point. You don't know when and how that will culminate, but that's how that kind of played out for me.
I love that point though. And the reason why I love it so much is because it's so different than the way that I thought about it. And that's the beauty. And I think there's a lot of people that will identify with that modality because what you're highlighting is contrary to how I think about it, which is having like a pretty well defined plan that I'm focused on executing like pretty consistently. What you're highlighting is that if you adopt good general habits, it kind of comes out in the wash. Like you might not have to do all this bullshit that I do to figure out where you're going. If you do the right things, generally the right stuff, you were in the right spot.
Yeah, you get
So
lucky. You'll get lucky.
but to your point, it's putting you in a position to be lucky. I think it's kind of
Mhm.
like that's really where luck essentially is able to come to fruition is when there's a lot of hard work to put you into a position to take advantage of it when it's there. So you come up to this decision, stuff happened at work, and you're getting ready. You're obviously it's not like I assume it's not like you go in Monday and you're like, fucking I'm out of here today. My guess is that there was a little bit of forethought before you actually pulled the switch
There actually wasn't.
at all.
Something happened on a Friday, and and then I resigned on Sunday.
On Sunday.
Yeah,
I
yeah.
love that. Well, still, there's some thought
And
there.
so the funny thing was
It's
is
so awesome.
and I I don't want to go into it too much.
Sure.
I mean, it wasn't anything. Um, but long story short, so I had been doing YouTube and research, and I had a Patreon, and I was posting like research things from various back tests I've done, and was kind of like building this little community around
Mhm.
research, options trading research. And I had started my podcast, and it was all these things I was doing outside of work. And I had a YouTube channel. So I to help pay for like the production, because I couldn't do everything myself. I had a production company, if that's what you want to call it, who would basically, I would record my podcast, I would give them the audio, they would create a video and post it. Like I just kind of, because I didn't have time, I was working,
Right.
and they would just post the stuff for me. Well, um, they, someone in HR or this executive person who didn't like the IT department found out I had a YouTube channel, and they thought I was making these videos like while I was working.
Mm.
And so they pressured my boss to kind of give me a hard time. And I was like, well, I don't actually post those videos. And then it got into this whole like, they're like, hey, another video posted on Wednesday at noon this week. And I was like,
You guys know how scheduling works, bro?
well, and my boss the guy that knows. And then I'm thinking, I am working with the dumbest people.
Right. Why?
Like
Why am I even this to you?
literally the HR person, they schedule these emails to go out. Do
Right.
you think Susan is sending out this email at 6 in the morning? Do you think anyone believes that shit? And I was just like, so you actually think, and if you've seen any of my videos, they're not like this, some like off the cuff stuff.
So
They
funny.
are, there's a lot of time and effort I put into my videos to make them short and concise.
Mhm.
And I was just thinking, God, either you guys think I'm a super genius or you're super dumb. And either way, like this isn't working for me. And then I had a chip on my shoulder, and I was like, so now I'm gonna go back in and try to like what's this gonna be like moving forward?
Right.
Like now that I was annoyed, and I was and my, you know, my wife's funny. She was like, "You should have quit 6 months ago." Like
Well,
she was on board. She wanted me to leave, and I was like, "Yeah," and I had to think about it. But then when Sunday came around, I was like, "Well, I better." Part of me was like, "I better quit, because if I want to find another job,
I
I don't want to
see.
like get into an argument and get fired or something dumb like that." Because that's where I was at. I was ready to argue. So I was like, "I don't need this. I'm gonna quit." I had company shares; they had to buy me out. That added to my runway. And so I was just, kind of, I put in a 30-day notice, and
Super
um,
generous.
yeah, yeah, because I didn't want to leave my boss
Right.
hanging.
Super generous.
And we're still friends. He still works
Yeah.
there, and it's, but it was
So
just, like the company culture was changing a little bit, the management, and like they just weren't that savvy. And the upper management was less technology forward, which was harder for us, and it was just like this. I don't need that. I've been doing this a long time. Like we know how all this stuff works. So that
well,
was a Friday, and then I told my boss on Sunday. So I
it
was like,
it's
so no,
awesome.
this, I hate to say, hey, you can plan this out. Sometimes you just, but I go back to,
Well, there still was a loose plan there.
had I not saved my money and learned from my previous debt mistakes from my teens and 20s, and you know, like I said, COVID had happened. I mean, I didn't mention this, but my mom had gone she had to go into a nursing home. She had MS, and I had to manage
Mhm.
her house. So there was a whole bunch of things going on, and I was just like, cash flow, simplify. I don't need that much money. I've been poor. I'll be poor again if I need to. Like, I don't care. I just want like the value of doing whatever you want, whenever you want.
I mean,
Like it's just I live in Florida. Like I don't really have to go on vacation, if I don't want to. I can just go to the beach anytime I want. So, it's you kind of go through some things. I think COVID put me through. I'm a little bit older than you, so when you start to get to your, I don't say it's the second half of my life, but probably it's the second half of my life. It's like, well, what are we doing? You want wheelchair wealth, I think is what they call it, where you work your ass off and you have a ton of money when you're 66 and a half or whatever the number is? Or do you want like just positive cash flow and enjoy it now and enjoy the time? So that was kind of part of the mindset of making that decision, with the idea that I could always go back to work if I needed to. Now I think that's harder to do because I've been out of the game for 4 years, and the only thing I know is I've narrowed my universe to a certain type of trading and mindset. So could I get a job somewhere if I needed to?
Sure.
Maybe. I mean, would I
Sure.
want to? Maybe. It's kind of boring, sometimes like I have kids now, but I know like when the kids are gone, like I don't know, maybe I want a job again. Like
Hmm.
there's nothing wrong with having a job
Not
if
at
you
all.
like it. I loved my job for the longest time. For the first 10, 12 years, I loved my job. And then the last few years, I didn't love my job. So, there's nothing wrong with having a job. Trading is just a different type of job. And sometimes it's good to have two jobs.
Well, I think you hit on a bunch of super important points. The first one is, even though you didn't necessarily have the roadmap, on Friday that like Sunday I'm gonna leave, right? The fact is you still had put enough forethought into building the origin of the plan that you
Mhm.
had built a runway and a skill set that you could reasonably lean on, and it was time to activate that. I just highlight that for other people because a lot of my audience, they're used to my way of doing things, hearing me talk about my way of doing things, which is everything is very planned, like essentially everything. And I think it's really cool to hear so many elements of your story that stem from having a general plan, but not necessarily, the same approach that I technically take, and it still worked out well for you.
Yeah.
So the other thing that I want to highlight, as I heard you kind of talking about that path though, and the important point is that you had built enough of a skill set that you felt confident in making at least a crack at this. Even though you had a year runway, you weren't going into that thinking, I'm just going to burn this full year and then find a job. It sounded like you wanted to
No.
trade and like see how this does. So walk me through what steps you were taking leading into, again, T0 being the transition, that built that confidence, that built the background of saying, Sunday, don't feel like going to work Monday. Later, nerds.
Yeah. Yeah. Well, it was scary. I can say now, for whatever, 5 years later, that that was the best decision I ever made or whatever, but it wasn't at the time. It was scary. We didn't know. I didn't even know what to do. Like once I actually finished work, my last day, it was like the next week, it was like, okay, now what? Because but um sorry, what was the question again? I got sidetracked.
Yeah, totally cool. I wanted to check in with what you were doing trading wise, what kind
Trading
of
wise.
track record you had built before you made the transition to think that this is something I could rely on. It was a skill set you trusted
Yeah.
to some degree.
Yeah. So I had been doing really short term SPX kind of income trades. I had been doing longer term stuff. I can't quite remember the strategies at the time. They're all relatively the same. And again, it was just really about cash flow and understanding that I think for anyone who, I'm sure people know this, but you don't always win. And there are periods of time where you either lose or maybe you don't have strategies for because the market's not doing what your normal strategy is. Or like when we're talking the market's sort of pulling back. I'm not really doing a lot of trades right now because most of my strategies are kind of bullish things. So I'm kind of on the sidelines in a lot. But I think um, it just goes back to risk reward and cash flow and zero DTE was coming more in play at that time. And then I think it was at that time, there was Monday, Wednesday, Friday. So we could do zero DTE 3 days a week. And so that's kind of what I focused on. And I got with a buddy of mine, and we had done a bunch of research, and we were putting out research on that. And we had a community, and we were buying data. And I think we've talked about this before. We were buying data.
Oh
We
yeah.
put together this thing. We were selling the results. So I did have a little bit of additional income with the research I had been doing, which I had been kind of already doing that. So I did have a little bit of income coming in that could
Mhm.
probably pay the bills, if you will. And then we just focused on those strategies, and that eventually those we learned some things from those back testing. And then ultimately, I decided to get back into price action as opposed to options testing. And that's when I got eventually launched alpha crunching in, I think it was November of 2022, which was about maybe year and a half after I had quit. So I did a bunch of research and realized, oh, okay, for this type of style, I really want to know more about price and just being on the right side of price action. So I kind of went over there, and now I don't venture out of my option strategies very far anymore, and I'm just really focused on risk reward and probability um, of the system that we've kind of come up with. So um, I think does that answer your question?
Does. Yeah. And it's also good to hear that. I mean, you're really taking like a programmatic approach to it, which is very cool.
Yeah.
So we have a few minutes left here. There's a couple of things that I wanted to hit with you. The first one, though, is when you were devising your strategy in general before alpha crunching. Well, I know it kind of carried over into it. But when you were refining through your strategy, walk me through at a high level that process. It started with back testing to some degree. So you're using
Mhm.
ideas, but how did it go?
Um, most of the strategies that I ended up testing were just it's it's very simple. Um, what I found over the years when it came to credit spreads, and this is something that I don't think most other people do. I think this is why I have my own thing going on, is I trade a lot of at the money stuff. I don't look at IV. I don't typically try to roll, or I don't sell Delta 5 anything. I mean, I used to. So what I've kind of gotten into is like a sort of a fixed risk reward of at the money stuff, and it's either going to win or it's going to lose.
Mm-hmm.
So there's no, you don't know what's going to happen, but I know how much I can win and I know how much I can lose, and I know what that win rate's going to be consistently over time. So I think over the years, you eventually figured out, and I get questions like this all the time, where we'll sell put spreads and do, we had a great couple months here until market turned down, had some losers. Now we're kind of waiting. And one of the and we talked about this last time I think I had you on my show, but um, one of the attractions of options is to trade both sides. And I think if unless you're extremely advanced, I don't recommend trading both sides. I think with credit spreads at least, or even naked, if you're selling strangles or whatever, like, if you don't know how to roll or adjust and those type of things, like you have to be really careful because you can get blown out, which that has happened to me. I mean, even recently I was doing some iron condors, and I had to adjust and roll because that's what the market was going straight up. But I think my the strategies I end up focusing on, I think, fall in line with what the market typically does. And typically the market goes up over time. And some people call it positive drift or
Mm-hmm.
whatever. And so one thing I like to tell people is I trade a lot of put credit spreads, mainly because the market tends to go up. The market goes up slower than it goes down. And
Mhm.
so when you start introducing things like time and options trading, if you have time, the market will tend to recover and come back up. Obviously, that when there's a bear market, that doesn't happen, and you have some things that tell you that when it's a bear market. But so I think really narrowing and focusing on one strategy, um, instead of trying to trade, and also instead of trying to trade every market environment, there's just certain market environments that are going to be different. Like right now, that, you know,
It's
if you
awesome.
if you sell call spreads every time the market goes down, you will lose money because most of the time it recovers. And the one time it doesn't recover isn't enough for you to make up the losses on the ones that it didn't recover, or it did recover, excuse me. So things don't work in reverse, I guess is what I'm saying when you're looking at long and short side. If you're a what I call a real options trader, which means you are trading the Greeks, and you're trying, and I consider you kind of in that camp where you're trying to capture the risk premium, and there's it's a whole nother thing. That's awesome. I'm more like, hey, the market's going up. Let's leverage the shit out of this until it stops going up. And now it's not going up, and I'm just gonna not do anything for a couple days, a couple weeks. Shit, it might be 2 months before I get anything significant off. And I'll do zero DTE all the time, because you can kind of that's sort of like a bread and butter. But when the
Yeah.
market's in sort of like it was in I don't know, May, June or so,
Mhm.
I laid off zero DTE, and we were just doing 1 day, 7 day, and just rode it all the way up. And now we're back. Now the market's down. We're out of those trades and doing a little bit of zero DTE, because if things kind of set up right. So I think you just got to know yourself and what you understand and what you can sit through, and you have to be able to lose and watch it lose and not do anything. So it comes down to your strategy, I guess. And I've just kind of gotten to the point of, and I'm not all the way there, I'm about 90% of there, of just taking the trade that your setup's there and just letting the math play out. And I try to do things that don't require very much adjustment, and I'll just take the loss when it comes. So
Yeah. Yeah. That's
kind
awesome.
of all over
And
the place with that, but yeah.
no, it's really cool, and it's honestly it's one of my favorite things about you is like I consider you both a friend but also a thought partner. I think it's so important to get around people who see things and do things differently than you do necessarily, you being the proverbial you, because like you're talking about, I mean, I'm a degenerate, bro. Like I'm trying to trade up, down, sideways, in circles. I want to trade vol as it's going up. I want to trade that stock as it's going down. I want to trade post earnings announcement drift. Just out here slinging stuff.
Yeah.
But you highlight another approach that's worked really well for you. And that's cool to me. That's really, really cool to me, especially as a reflection of markets and how they are this space where you really, and you hit it right at the end, you have to identify what works for you, the individual. Because to your point, if you gave me what you're doing, the probability of me being able to just sit there and let it do what it's supposed to do is probably low. I would dork it up. I would be like, that IV looks a little off. I bet you I could come up with something here. And then I'll just start tinkering with shit. But that's the cool part about trading and options and like specific, that you can really set things up that work for you. So I love hearing about that for you. Now, the last thing I want to ask you, and then we're going to have to do a whole other session about this build out of alpha crunching and stuff like that, because you and I have spent actually quite a bit of time talking about the idea. I remember when you were going through the original development of it, it was fascinating stuff.
Yeah.
And I want to make sure people hear more about that story. But for the end of this session, I actually want to pivot you to this big thing. And it's something I don't know if you realize that there's so few of us that have gone through this process of like jumping into trading. most people have one foot in, one foot out. And like you said, there's nothing wrong with having a job.
Mm.
Totally cool. Literally totally cool. It's probably just a more efficient thing for a lot of people. But a lot of people do aspire to the idea of unlocking their own freedom, their own time. That's why a lot of us start trading. If you were to think about the primary steps you took to go from the trader that showed up to a Thinkorswim conference to the trader that was able to make the leap from a well-paying job and trade your own book, what were the primary muscle movements that happened over that time frame that made it possible?
Definitely persistence and curiosity. Those things have to be there, because you will. So I blew out a couple accounts in the beginning,
Oh yeah.
and so I paid my tuition like all good boys do, and I think it's just, you know there's this thing of like, I want to use the word ego, right? Like I have a big ego. I've learned to remove the ego from my trades, but I have a big enough ego to proclaim that I can do this. So it's kind of this weird thing that in the beginning I had an ego that, oh, I'm smart. I'm an IT guy. I know things that nobody else knows.
Mm-hmm.
And so I'm going to be able to figure this out. And, everyone figures it out for a little while, everyone, it's what you eventually figure out is that you can, I've seen these memes and it's like a guy looking in the mirror and the meme says, it's not the bull market. You really are a genius,
Yeah,
right?
yeah, yeah,
Have
yeah,
you seen that?
yeah.
And it's so true where it's just like, I remember, and someone put me in my place. It was a old friend of mine. He was kind of like a real estate guy and he knew I was trading and I was doing options in a smaller account and I was being conservative and I think I was up 30 or 40%. And he's like, "Oh, how's the options trading going?" And I was like, "Great, man, I'm up 30%." And he's like, "Yeah, so is everybody else." And I was like, and they weren't doing anything.
Yes.
And
Yes.
then so it's those little things that understanding like you're you're not a genius, you're methodical or whatever, but just having the confidence, I guess, to like keep going. um and I think ultimately, like for me, it was just like I'm good, just going to do this. I love it. I like just fascinated by the math part and just markets in general. So if the whole finance piece is definitely interesting, and how learning about how the world works, I think that is what kept me interested, because you're like, oh, whether you win or lose and the market did something crazy, you're like, well, why would the market go up if there's bad economic reports? And then you realize, oh, well, the Fed prints money. And it's like, I never knew anything. Like, I don't have any finance degree. I've just kind of learned this stuff over the years. And so, you just have to have an interest and be persistent with something. And what I normally would tell someone in the beginning is just, if you're going to trade options, find one thing, one ticker, maybe two or three, one option structure, maybe that's credit spreads or condors or whatever,
Eight
and then
verticals.
just one setup. I think starting with verticals is best because it's the lower risk, and it kind of makes sense. You can trade it directionally, and then you can flip. You do a vertical debit spread, and it's kind of a directional. You buy a call spread and you want it to go up, and then you eventually you flip that to a credit spread where you don't want it to go down, kind of thing. And I think time frame is important, that you should try to focus on one time frame. So if you're working a day job, you probably want to watch the daily chart, maybe a 4-hour chart, but don't come up with some strategy on a 5-minute chart, because you won't be able to execute that consistently. And then you're going to want to, and at some point you have to say, no, I'm not going to take this trade. And if you've spent 2 hours in front of the computer, and you've been able to say, no, I'm not going to take this trade, that means you're good. But most people, after 2 hours on the computer, well, I got to do something, and then they just take it, or they jump the gun or whatever. So I think your time frame's important, and your duration. So I think most people probably end up in the tasty trade world of 30 to 45 days, and I think that's a good place to start. But if you want to make more, and if you have more time, you can then lower your time frame. I kind of fractal nature of it all, and that's ultimately what I've gotten into, is like, okay, we have options every day. I don't trade 0 DTE every day, but I trade a lot of 1 DTEs now, and I can be consistent with my ticker, my duration, my strike selection, and it's just, it's very repetitive. And the exciting part is, it's boring to put the trade on. The exciting part is this one going to work once it's on? You don't know till after. So, but not doing anything about it. So yeah, that's kind of where I ended up.
Yeah. That's awesome. Well, I always tell people the exciting part is figuring out where you're going to spend all the money you make. You could be excited somewhere else, take the money and go do something fun with it. But man, I think the main thing people should walk away from is this concept of building an approach that works for you, and taking the time to see what that is, and understanding that there are so many different approaches that work for different people. People that are familiar with my work know that I have a very different approach. And the cool part is we both have found things that work for us, which is, again, that's the coolest part of trading. So Eric, thanks so much for hanging out for a little bit, walking through the way that you look at markets. Like I said, we'll definitely have to have you back on to take a look at some of the other stuff that you've really developed, maybe get into the details more. Sure. On building the approach and going through and making this analytics organization really that you've launched. It's all very cool stuff to me. But thanks so much for coming to hang out. I'll obviously throw links to all of your stuff in the show notes below for everybody that wants to take a look. But is there anywhere in particular you want to direct people to?
You can find me on Twitter if you want to reach out directly. My handle is Option Assassin.
Oh yeah.
Oh, I grabbed that one back in the day when Twitter first came out. But yeah, I run the stock market option trading YouTube channel and podcast, so you can find me over there. But if you want to, reach out to me directly, Twitter is probably the best place.
Sweet. I'll have all of that below for you to take a look at. Thanks everybody for hanging out until the end. Be an outlier. And we'll see you guys later.